Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors. Let's get started. The new Spartan Council had their first public meeting last week, where they started off strong with a new proposal to further shake things up. Fenway presented SIP 411 to acquire Quenta and relaunch Synthetics Exchange. The current proposal is for a 1 Quenta to 17 SNX exchange rate via a token transaction, which values Quenta at about $13 million. Should this pass, the SNX will be subject to an initial 3-month lock, followed by a 9-month linear vesting period. One of the main objectives of SR2 was to reassess decisions that have been made in the past, one of which being the decision to separate the front end from the back end. Bringing the exchange back under the Synthetics umbrella brings the protocol closer to the end user of the product, the traders. It also alleviates some of the pain points that the protocol has encountered recently and creates a number of opportunities. The first is better branding, by creating a Synthetics product associated with the Synthetics name. The second is less dependency on external providers. Once a product is ready to ship, it will already include front-end support, which will eliminate the delivery choke point of getting integrators on board. And ultimately, the biggest opportunity is to create a better product. Owning and operating the front end will create the conditions for a much better product experience. Fenway explained that a few options were considered before deciding on this acquisition proposal. The first option was to build a front end internally. However, it was decided that the cost of incentivizing users to switch to the new platform would be too high, and the time to ship for this new exchange would be too far in the future. The second option was to acquire a front end, specifically Quenta. The benefits of this option are that Quenta used to be part of Synthetics, has very strong ties with the project, and users are already familiar with the trading experience. The biggest downside of this option is the cost of acquisition. And the third and last option that was considered was to hire an independent team. But this essentially had the same issues as the integrator model, as the objectives of external teams may not always be strategically aligned with those of Synthetics. Fenway went on to explain how this acquisition would be funded. The proposed method would be to mint a little over 9 million new SNX tokens to cover the cost. The decision to fund this purchase via token inflation was not taken lightly, but Fenway believes the purchase will generate more value for the protocol than the $13 million price tag, and will therefore be a good use of the funds. Plus, the Treasury Council is not currently in a position to fund the acquisition while maintaining the runway needed to fund operations. It's also important to note that this proposal would not mean the end of third-party integrators. The protocol will remain committed to building an open-source liquidity layer and will continue to incentivize the development of competitive products using that resource. A community member named 50 had some questions during the call and was brought up on stage to join the discussion. He first requested a document that explains how the purchase terms were determined, and Fenway has agreed to produce a document with that information. He then asked why Liquid Quenta is being traded for locked SNX, and Fenway answered that Quenta doesn't trade in high enough daily volumes to support larger trades, as it is sometimes recording slippage of 25% for orders worth $50,000, while SNX slippage is around 2% on orders of $250,000. Fenway added that the lock will also serve as an opportunity for Synthetics to demonstrate over the first 3 months to the Quenta community why they should stay invested in the protocol. Lastly, this acquisition was offered to Quenta rather than other exchanges because of the history between the partners. Fenway believes that this merging of communities will help generate additional value for token holders and create a cohesive, unified, and passionate army of Spartans. In order to pass, this will need to be approved by both the Spartan Council and Quenta Council, so stay tuned as the proposal progresses. In other news, Multi-Collateral Perps is live on Quenta, featuring TBTC as the wrapped Bitcoin collateral asset of choice. Synthetics chose Threshold Networks TBTC because it's built for DeFi and is trusted by the community, boasting 82 integrations across 6 chains, over 1,500 holders, and $293 million in supply. Threshold's TBTC also promises permissionless minting and redemptions, 24/7 on-chain auditable reserves, decentralized custody and bridging, and one-to-one backing with Bitcoin. Threshold is also an active team across many ecosystems and has expanded decentralized bridged Bitcoin. So head over to Quenta to trade over 80 new perps markets and 4 new collateral options featuring TBTC, ETH, USDE, and USDX. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.